Hello everyone. In one of our recent reviews, we looked at Amazon shares which were priced at $225. Take a look at the chart. Now they're worth less than $215. I mentioned that it wasn't the best time to buy. What it's like now, you can see in the previous video. Even I don't remember exactly what was in that review. And now we move on to a much more interesting instrument, or at least no less interesting, gold. On the quantum theory platform, you can trade gold in the form of futures. Here they are, the December futures. This means that their trading end date or expiration date is in December of this year. But their chart is very choppy and short, especially in its initial phase. It starts in 2022. We can open not futures, but an ETF fund that is linked to gold. And here the chart will be much more interesting and longer. Look, here are the monthly candles. It starts from 2004. So there are more than 20 years of gold history on this chart. Well, let's get to the analysis. So as you can see right away, I don't have any pre-made setups. There's a crazy growth here. Of course you shouldn't, and it's wrong to buy into such growth. I mean, no one is stopping you, but it's not the right thing to do. Notice that the RSI is in the 90 plus range. In the past 20 years, it has never risen this high. And that means if you buy gold now, you'll be buying it at extremely high levels. Yes, no one knows where this growth will stop, but it's absolutely certain that buying now is a very bad idea. You'd have to be crazy to buy gold at the current price levels. Even if it continues to rise, it's almost certain to do so through a correction, and that's when you should buy. Where could this correction go? We'll try to determine that together. Now let's switch to the weekly candles, because on the monthly candles there's growth, continued growth, but it's not a place to buy. It's a completely similar situation. The RSI value is 86. That's very high. There's a very strong gap from all the moving averages. And this strongly suggests that gold is very likely to correct itself. But where exactly will it go? It's hard to say. All we can do is apply the Fibonacci retracement. Let's try to do that. Here it is. Here we had some growth, and according to the Fibonacci retracement, the correction went, let's say, right here. That was about 50%, right? Now we take the growth wave that we had here. It's even hard to say where it started from, but probably at least from here. Wait, that's not the right, I picked the wrong tool. Here we have the Fibonacci retracement. So roughly from here to somewhere over here. And a 50% correction suggests a drop to the level of $2,830. But most likely, gold won't fall that much, because there's the factor of inflation. Let's just look at the minimum correction we can consider. From the point where the last rally started out of the sideways range. It started from the level of $2,930, right? Well, I'm multiplying by 10, and that's for a troy ounce. And right now it's roughly at about those levels. So a 50% correction would mean a pullback to around $3,300 per ounce. That is precisely the zone where, technically speaking, we fully expect a significant correction in the price of gold. That's it, there's nothing more to add. Should you open a short position on gold? I wouldn't recommend it, at least not right now. And based on what we've seen on the monthly and weekly candles, there are no reversal patterns here. What we see is extreme overheating. But that doesn't mean that prices will necessarily fall from the current levels. Let's switch to daily candles. Maybe there's a short opportunity here. On the daily candles, the situation is also uncertain because, well, it's clear in the sense that the uptrend continues, but there isn't a single reason to take a short, except for the fact that we have a very clear divergence. Take a look. There's one high, which matches a price high, then a second high, but the RSI no longer reaches the previous levels. Yes, there are prerequisites for a short here, but there isn't a single engulfing pattern, which means we can't figure out where to place a stop. And we can't claim that a reversal has started, right? At least there aren't even the initial signs of such a reversal. So right now, all I can say is that it's absolutely not advisable to buy gold at the current levels. Not that you can't, but again, it's just not the right move. You need to wait for an engulfing pattern on the daily candles that will indicate a reversal, set a stop behind the red candle that engulfs the green growth candle, or maybe even wait for a double divergence and expect a correction. Well, it's hard for me to say right now, but it's likely that there should at least be a correction to the 50-day moving average. But that's around $3,500. For now, that's how I see the situation. So I would wait for reversal structures on the higher time frames, meaning either on the daily candles or the weekly ones, and only then make a decision. Or maybe I wouldn't open a short position at all, but would wait for the correction to end after it happens, and then open a long on gold, because gold is a financial instrument that usually grows, although after periods of rapid growth it often enters very long periods of stagnation. Subscribe to the channel. All the best.